Welcome to Financial Focus, brought to you by GulfCoast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the team at Gulf Coast Financial Services and founder and CEO, our resource on the program for that common sense approach to planning for your financial and retirement future. He is John Kuykendall. John, welcome back in.
Thank you, Peter. It's great to be here. I hope you had a good week.
Always a pleasure. Yes, I did. Thank you. You as well. And continuing to try to just stay safe and healthy and then have some kind of activity to stay sane. Balancing all that is a challenge.
Well, you know, we continue to talk. I just left a Rotary Club meeting and we were talking about, you know, what's normal and what the new norm is going to be. And I'm not sure we know exactly what that's going to happen. Everything's been turned upside down. I read today that Florida is off 60% in tourism. And you know, tourism is a big part of our income. So we've launched a massive campaign trying to get people to come to Florida to take advantage of the events here. So I guess maybe some of the attractions have opened back up, and hopefully we can get behind us on it.
I am seeing some ads up here in North Carolina for some of the tourist attractions down there in Florida. But that's one of the main reasons, as I have heard it, that Florida is able to not have that state income tax. Was the revenue that was brought in from tourism helped to offset what was lost in not having a state income tax.
Yeah, our economy is based on the tourism, the taxes that we gain from sales tax, and the amount of money that people spend when they come down, and then property taxes. So those two ways give us our income, and it has eliminated the state income tax for us. But, you know, at the end of the year, we're going to see how bad we were hurt. I think COVID, the effects of COVID haven't been seen yet. We're not going to know the total effect, not on the health issues, but on the financial issues until after the first of the year.
Well, I've talked with many business owners who basically told me, hey, this year is just going to be a write-off for us if we can make it through. It's kind of one thing, John, when we as individuals plan on a steady trajectory of positive returns and cash flow. But when states and governments plan on that and then it doesn't come true, that's when we really see the dominoes starting to fall and how much of a house of cards it really is.
Yeah, and you know, one of the things here is, of course, our school district, all the school districts in Florida are based on attendance. So the more kids that we have, as we take attendance, and the state allocates money based on the attendance. So when we started school this year in Columbia County here in North Florida, we're 1,500 students short. There are 1,500 students that aren't in our school system that were there at the end of the year. Now, those people didn't move out of the area. What happened is they're probably on the Florida virtual education system. So the Florida virtual will get that money, not the local school system. So there's another problem. We just don't realize how all these dominoes fall into place, and when they start tumbling, we don't have any idea what the effect's going to be.
Everything a little topsy-turvy right now as we figure out this. I don't want a new normal. I want the old normal back. I miss it.
Whatever that was.
Yeah. Well, another thing that has changed here, and this has flip-flopped several times, John, is that the direction the Fed has said that they intend to take with their economic policy. In particular, the recent announcement was they're going to loosen the restraints on inflation. We don't love inflation, but some amount of inflation seems to be healthy. My question is this a bit of the tail wagging the dog? I mean, they've digitized and printed $6 trillion into the economy. Inflation's going to be there regardless. They're just acting like it's intentional.
Well, I think that what we're saying is that, you know, there is no, in the past, we've tried to keep inflation low. And so I think that they figured out that they are going to have some sort of inflation. And so we addressed it earlier with this policy of not worrying about it. My concern about that is that, that's a tricky tightrope that we walk between having enough inflation to keep the economy going, but not have too much inflation so that we have runaway prices. And so with this policy, which really is at the discretion of the Fed, and as the members of the Fed change, that creates a whole new dynamic. And so where do we stop? It's kind of like when we devalued the dollar and got off the gold system. It used to be that we had $1 of gold for every dollar that we had out. And when we took that off of that system and did away with the gold standard, then we could print as much money as we wanted, but our dollars fluctuated in overseas currency, which affects us with the trade deficit and everything else. So this is a really tricky balance that the Fed has started. And I'm not sure how this is going to work. I think that, we have to be careful. We don't want the inflation that we had in the 80s when prime was 21 and everything was very expensive. And as a retiree, and as we're looking at building these income plans, we factor in 2 or 3% inflation, but 4 or 5% inflation will really tank the majority of income plans that we're building.
With the historical inflation rates of just 3% as kind of the average that they use, the need for income doubles in about 24 years. If we're living off of $3,000 a month today, and then the regular inflation occurs at 3% in 25 years, we're going to need $6,000 a month. That's a tough task if that accelerates any further than that.
Yeah, and I mean, the problem is that if you're working, it's not quite so bad because your job is going to keep up with it somewhat, your salary. But if you're retired, you're paying yourself, then we've got to make, 3, 4, 5% on top of what we make in order to come out and keep you ahead of inflation. And at 5%, it only takes 15 years or less than 15 for prices to double. So we have to control inflation, but I think what the Fed wanted to do was take as much of the spotlight off of it, because we are going to have more inflation just based on this stimulus. So we're going to have to pull some of this back and do some things. Tightening, they tighten credit and loosen credit based upon what the economy is doing and what inflation is doing. So it's a real tightrope.
When you're talking about retirees who are no longer earning that paycheck, that have a finite amount of money, and even more difficult task to deal with higher than expected inflation. And my concern, John, with the Fed saying they are loosening the policy on that is once the dam is leaking, the levee breaks pretty quick, and it's hard to reel it back in and regain control.
Well, yeah, I mean, that's just like the new, I was talking to my grandson yesterday about this new thing that they have where you can postpone withholding taxes for the rest of the year based on your income, but you got to pay it back next year. So all you're doing is just deferring the debt and creating more debt. And that's the same way with inflation. We can create a little bit of inflation and it's good for the economy, but if we're not careful, too much inflation is going to be bad for the economy. So it's a tightrope that you really balance. You better have a long balance beam to balance this thing.
You really got to get a handle on what it means to your personal situation. Of course, there are forces outside of our individual control that are maybe governing direction on that, John, but we've got to have a plan, bottom line, for how we will account for and address those items. And if you don't have that plan, if you want to renew or review that plan or update it, pick up the phone, give a call to Gulf Coast Financial Services and Gulf Coast Tax Advantage, and the combined companies, sister companies there, can take a look at your planning from both the financial and the tax perspective and make sure that you're doing all of the right things reviews. 386-755-9018. That review is a complimentary review. No downside for placing that call, no cost, no obligation, never any benefit to procrastinating. Get that plan put together, and they are capable of conducting those reviews either in person or through the safety and the convenience of technology, doing virtual reviews. So if you'd like to sit down and have a conversation with an experienced, qualified professional, and in fact, a team of professionals, generations of professionals under the roof there at Gulf Coast Financial Services, give them a call, 386-755-9018, 386-755-9018. And kind of a long intro to this program, John. We have a theme here that I thought was going to be a pretty fun one. We got into a little bit of a rabbit hole there with a little bit more serious conversation, but you brought along this list of 10 financial movies that everybody should watch to get a better grasp of the financial world. And so full disclosure, I haven't seen all of these that are on your list, but seem to be pretty good ones.
Me either, but as I told you earlier, I think it's a great way to binge watch on Netflix or Prime Video. These are certainly not historically accurate, but some of them give you a pretty good insight in what happened in a lot of the 2008, 2009 era, and back even further than that. But I got to admit, I haven't seen all of these, but I'm going to look them up because I didn't realize some of these were out there.
Yep.
The first one was that movie Arbitrage.
Yep.
With our friend,
Richard Gere.
Richard Gere, yeah.
Yep.
Love Richard, been in some great movies, but I didn't realize that he was in that movie.
Yep.
And I honestly haven't seen it, don't know anything about it.
So the storyline for this one is that he's a hedge fund manager, and after some big losses, he basically cooks the books behind the scene, borrows $412 million. He can pay that back, right? In order to make the fund solvent. But of course, the tale spins into the story of the fraud, and it leads to a lot of trouble for him. So Arbitrage is the name of the movie. Tim Roth also in that. I like him. So that should be an interesting one.
A couple of the quotes there was, don't expect 90% from me. I can only do 100.
Okay. All right. I like that. Yeah. I like that. I'm going to use that one out on the baseball field for my son.
Yeah, that'd be a great one. But that actually, even though it's arbitrage, we're talking about a hedge fund manager, that has happened in the past to actual broker dealers and other financial advisors who have either lost money or borrowed money from accounts and then thought they could make it back up. And it's almost impossible. Yeah. And so you have to be really careful with other people's money. And I think it's a good lesson. So even though you're looking at the hedge fund and you're thinking speculation, it happens in a lot of cases. I was involved in a case like that with a former broker dealer I was with back in 2000. And while he didn't take any money himself, he fudged the profit that he was making in order to keep everybody happy, and he couldn't actually make it back up. And so he ended up being sent to prison. Yep. So I'm very familiar with that, and it can happen anytime. So we're very careful. And one thing that we really do is we think our audit and our compliance is something that we really believe in strong here. And any broker dealer or any advisor should really love compliance and love the compliance part, because that's what keeps us straight.
Keeps you in line, and the consumer and client and investor should obviously love that as well. A little bit of responsibility there and backing to that, to know that the compliance, a separate third party is watching out for you. Next one on the list here, Bad Banks. Another one I haven't seen, but this one, it sounds like a highly technical financial film, if you like that kind of stuff. Talking about banks in Europe and how they are delivering on their promises. It's not just a job, it's a bloody job. Is the quote from this one.
Well, we had a series of bank problems back in the late 80s. And so this same thing kind of happened here in the United States, where we would have actually savings and loan executives. There are several books out. I've got about 5 of them that I've read, where savings and loan executives would go to lunch, and during lunch, one of them would buy a piece of property, on the telephone. He would then sell it to the guy next to him, who would sell it to the guy next to him, who would sell it to the guy next to him. Before they got through, they had the property had gone from 200,000 to $1 million, and they got a loan for 800,000. So, that stuff happened actually, believe it or not, in the late 80s here in the United States with the savings and loans. And that's one reason that we have the savings and loans.
And I was amazed with the bank that they had the Senate hearings on, who were just pushing to open more accounts per client. That is some deceit right there. Wow. Next one on the list, one I have seen, and I really enjoyed this film. I'm not sure this is everybody's cup of tea here, but if you are into kind of the inner workings of the financial world, this one was really, really interesting about the lead up to the Great Recession. It's The Big Short, and Brad Pitt's in that, Steve Carell's in that, Ryan Gosling, Christian Bale, so some well-known Hollywood actors, and did a really good job of making the inner workings of the financial world kind of exciting.
Yeah. It talks about the housing bubble, which we did have in 2008, and talks about how the big banks are too big to fail, which we've talked about that in our economy before. It was a great movie. Everybody should look at that and watch it. Great actors and a great storyline.
No one can see a bubble. That's what makes it a bubble, is the quote. But I believe it was Christian Bale in this movie who was the hedge fund manager, Michael Burry, who did predict and see that it was coming. And nowadays I see all kinds of ads all over the internet. The guy who predicted the Great Recession housing bubble is now saying this, and it's pushing some new tip or newsletter for sale. It's always the newsletter that's making the profit, not the person who buys it.
Oh yeah, the market's doing quite well right now, and there are more and more people and more companies out there touting these. I can make you 1,000% in 2 weeks. All this stuff. Buy my newsletter. Get this. They come out of the woodwork in times when markets are good and when we're doing well. But Mama said there was no free lunch. And so, but there is today, I'm for schools anyway, but you got to work for it, and you got to be able to have a plan, keep to the plan, stay to the plan. There is no quick money in the stock market. It's kind of like gambling. You're not going to gamble and make a lot of money in the stock market. But that is certainly a great film and one that I love. I love this other quote: "Tell me the difference between stupid and illegal, and I'll have my wife's brother arrested."
Right. Boiler Room, the next on the list. Another.
Now, I have seen that one. That was a great movie.
Yep.
Where they're on the phone calling, selling, and there are a lot of companies that still do that, and where they're selling, pressuring.
Smile and dial.
Yeah. I would hate to do that. I had a friend one time that I was on my way to Tampa, and he called me on the phone, and I said, "Why are you calling me?" He said, "Well, I have to make so many calls a day, and I'm calling you because I'm tired of calling and talking to other people." And all he did all day long was pick up the telephone and call people trying to push a certain stock or a certain mutual fund or whatever he was selling at the time. And there are companies that still do that. They're high pressure, they're high sales, they're pushing, they're pumping. And you don't want to be part of that. You want to be part of a financial advisor who's going to give you advice, kind of be a fiduciary, tell you what you're paying for, what you're getting, and not selling a stock or a bond because they're going to make more money on it than you are.
Yep.
And that's what happened in this case is the company was making more money than anybody else. This guy thought he got to be really a super salesman, was selling all kind of stuff, promising everything. It's a great story for people to listen to, and when they get that phone call, hang up.
Cautionary tale there.
Yeah.
Another one, Margin Call. Demi Moore is in this one, released in 2011. Quote from this one: "There are 3 ways to make a living in this business. Be first, be smartest, or cheat."
Is this one where they were actually short and they had to make it up, but they couldn't make it up? One guy found it. And they were going to kill him, if I'm not mistaken.
Yep. But the lesson of it was don't invest in something basically that you don't understand. Was the end of the result of the movie.
Yeah, I can honestly tell you that there was a savings loan back in the 80s that I knew that decided they were going to do futures, and they hired an expert from New York to come down and run their futures department. And before they could shut it down, they were down $1.3 million. So you never want to invest in something you don't understand or you don't know how it operates, and you're relying on somebody else. You need to have good financial advice and a good sound plan.
Another one I really enjoyed. Another one with Brad Pitt. Either he's got a knack for this stuff or can fake it well for television or movies or the camera. Moneyball. And I was, I guess, surprised, but not surprised to see it included in the list. It's about baseball, but it's about a statistics approach to how to build a team. And of course, the Oakland A's under Billy Beane and through this approach built a powerhouse of a franchise for several years using this, not the traditional method of building a team actually at the time.
No, I love this movie. I've watched it 3 or 4 times, just watched it the other night. It basically he was taking people that he believed statistically would give him the best team. So it wasn't who could do the most home runs or who was the biggest player. It had nothing to, they were looking for the 3rd and 4th string, not the number 1 string. His salaries were the lowest of anybody, but he was producing because he had a plan, and statistically he looked at it. And he wasn't chasing winners. He was chasing average, trying to get average hits. So it's better to have a base hit than to have a home run, because with a home run hitter, they're going to strike out a certain number of times. And we know that. And so my thinking about this, it's better to have a slow, steady approach to your investing than to try to hit a home run and strike out.
Yeah. There were several quotes in this one that I really liked. Adapt or die. I think that is basically appropriate under many circumstances. When your enemy's making mistakes, don't interrupt them. I liked that one.
Yeah.
I hate losing more than I love winning.
Yeah.
And basically the lessons of the movie was different is not always better, but better is always different.
Yeah. Yeah. I love this movie. It's a great one for people to watch. It's very entertaining. And while it pertains to baseball, it also will pertain to your investing.
Danny DeVito, Other People's Money from 1991. I remember this one. It was a good one. A lot of humor in it.
Yeah, you were just a baby then.
I was young, but I've watched it. Yeah, I'm getting there, man. I got more grays. I cut them short and dye them.
Talks about, well, I've got less hair and gray, but talks about a corporate raider who buys companies and then liquidates them. The same old storyline that they've talked about, where, you get somebody who raids, sells the stock, buys up a struggling company, and then ends up selling it and dismantling it. It's a battle between the proposition that the purpose of a corporation is to maximize profits for shareholders, and a triple bottom line model that embraces the interest of employees. So you've got the interest of employees versus the interest of the company. I love the quote. It says, I love money more than the things it can buy. There's only one thing I love more than money. You know what that is? Other people's money.
And hence the title of the film. Back to one that I have not seen, Rogue Trader from 1999.
Yeah, I haven't seen that one either.
I think it's European, because I guess they're talking about the pound more than the dollars.
I love watching old British films because they're really, I think they're very well done, and I love British detective stories. So I haven't watched this one. It says it's available on Amazon Prime, so I am going to watch it. But it's got Leslie Nelson in it, or Nick Nelson, who causes the downfall of a bank single-handedly. So it's a situation where and we have that today, or have had that in the past, where one person got in charge of a bond department or got in charge of the department and then made trades and basically took the bank down, or the financial institution. We've seen that several times, and several times they've gone to prison.
Well, the lessons in this are all ones that I have spoken with my son about. That's breaking small rules often leads to breaking bigger rules. Don't be too proud to ask for help when you're in over your head. This one I've put it a different way, but I think very apropos for the financial world. Don't confuse brains with a bull market. I tell him success, but don't confuse brains with a bull market. And sometimes it's best to take a loss.
Yeah, I mean, that's true. Sometimes it's better to take a loss in a stock or an investment than it is to carry it long term and then end up losing all of it. And, you know, right now the market's great. Everybody's a winner. Everybody's doing well. And so we tend to get overconfident. And a lot of investors all of a sudden are saying, you know, hey, why don't we tweak this a little more? Why don't we do this? Why don't we do that? You got to have a firm investment plan. Stay with it. Stay with what you're comfortable with. And, you know, not try to be smarter than what you really are.
All right, the final two on our list. We'll group them together. Michael Douglas, Charlie Sheen, Daryl Hannah, Wall Street, and then Leonardo DiCaprio with The Wolf of Wall Street. Not kind portrayals of what goes on up on the market. And
well, yeah, and two totally different movies. I mean, you know, whereas one's based on greed, which is Wall Street, and I love that movie. I really liked it because when I was a banker, I had the same phone that they had in the movie, and I thought that was so cool that they had this sophisticated telephone, and I had one in my office. And then the Wolf of Wall Street's more about this individual who ends up doing well, ends up getting on cocaine and all kinds of stuff, and his lifestyle is totally ridiculous.
It looks very successful on the surface, but he's a hot mess, spiraling out of control.
Bad mess.
What is it? Power corrupts. Kind of.
Wall Street was more sophisticated, more about you know, a guy who was rich with a trader who was trying to get up, make more money. And this guy kind of made him successful. And so it's a question of how much are you willing to do to make money? And the more money you want to make, the more that Sheen would do for this guy. And so in the end, of course, it crashes as both of them do. But they were both good films. But, you know, The Wolf of Wall Street's a little more graphic, a little more modern. I guess from 1987 to 2018, we loosened our stance on what's acceptable, as you can see in these two movies.
Well, both of them had examples of things that were not acceptable, obviously. So
I
think that's what was being portrayed. But a fun list here, and I think any of these are a good watch if you want to learn a little bit, if you want to see how finance is dealt with in the Hollywood movie world, to make it entertaining, but also to get a grasp on some of the concepts, whether they're beneficial or a cautionary tale that you should know about money and what goes on behind the scenes.
Well, true. And I think there's some lessons that we can learn from all of these on what not to do. And if we look at it from the standpoint of, okay, what's really going on behind the scenes here, and how can I relate that to my portfolio, to my individual situation, then I think you can get a grasp of what's happening. And we can't be too greedy. We can't be overzealous and invest in a lot of things, especially when we're retired. You know, we don't want to get into futures and shorts and puts and calls and a lot of other things that can lose us money when we're trying to preserve our capital and pay ourselves a salary, which is basically what we're doing. We've accumulated all this money, and now I need to pay myself a salary for the rest of my retirement.
It's that simple. Keep it simple. Make sure you've got a plan that you can understand and a planner working on your side to make it happen, to structure that plan. And again, the team from Gulf Coast Financial Services more than happy to be that resource for you. Pick up the phone to get that conversation started. Give them a call, 386-755-9018, 386-755-9018. John, I'm going to circle all the way back to the beginning of our conversation. You talked about how inflation was high and pretty rampant there in the 80s and the 70s. A lot of times I think that people would think, well, there's inflation, so the market must be going up to account for more dollars. That's actually not what happened during that period at all. Times of rampant inflation often are correlated with down times in the market.
Well, you got to remember that it's harder for companies to make money. It's harder to have the price earnings ratio that we're looking for in the market. So as inflation goes up, it doesn't necessarily mean that the companies are going to make more. The companies actually make less. So the stock market didn't go up during that time like we've seen with low inflation. Since we've had low interest rates and a low inflation, the stock market has gone up more than it has ever in history. I mean, if you look back at the charts, while the market has been on an upscale scale, it has rapidly gone up because of the policies we've had. I think low interest rates keep our borrowing costs down for corporations, gives them a chance to make more money, keeps prices down, consumer prices down, but it also helps the homeowners because they can finance at lower rates, helps the building industry, which helps the transportation industry, and it just goes on and on and on. So low interest rates and inflation are better in my concern in thinking that high interest rates and high inflation, we can survive it, but we can't survive it for a long time.
Yeah, and you got to have a plan in place in order to account for that you continue to update, because certainly conditions will change in the world around us. John Kuykendall, his team there at Gulf Coast Financial Services, can help you structure that plan and keep it up to date on an ongoing basis into the future. Give them a call, 386-755-9018, 386-755-9018. We'll include a link to the list of the movies on the blog, on the website. So if you missed any of them, want to go back, you can just click on the blog, GulfCoastFinancial.net, and run through that list of movies again. John, always appreciate the time. Thank you for being here.
Thank you, buddy. I appreciate it. See you.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.